The October budget 2021. In this video I want to look at the changes in the budget, which won't take very long because there aren't very many. I want to look at what he didn't change, what he's already changed, and I also want to look at why he hasn't had to raise taxes as much as maybe we're expecting, because this budget, the unspoken thing about this budget is that he's been saved by inflation. So it is very much the inflation budget. I do regular updates on tax and accounting issues, so if you want to subscribe, you'll be very welcome. If you press the like button, it helps me and the channel. So why do I say it's the inflation budget? Well, really, growth and inflation have saved the Chancellor from raising taxes. Because what inflation does, and inflation is very much higher than he was expecting, is it forces people to pay higher rate tax that wouldn't normally pay higher rate tax. So if you were earning £50,000 a year and inflation increases your pay by say 6%, you're now earning £53,000 a year, and that £3,000 a year you lose some of your child benefit and you're paying higher rate tax. So you're paying much more tax on that pay rise that you've received, and it's only to keep you up with inflation. So inflation is called fiscal drag, and the fiscal drag is effectively a tax increase, but it's unstated. And if you look in the budget speech, you won't find it at all. It's like a silent little tax increase that goes through. And the same for people who earn £100,000 a year. It'll force them into losing some of their personal allowances. Don't forget that the £100,000 a year limit was set for very high earners 12 years ago, and of course it's still for high earners but not for very high earners anymore, and a lot more people are being forced to lose their personal allowances by earning more than £100,000 now. So that was the other side of the inflation was, and perhaps one of the reasons why we have higher inflation is because the economy has actually bounced back much quicker than they were expecting. So unemployment's lower, so their benefits claimants are lower, and pay rise has been higher than they were originally expecting. So all of that has meant they actually, if you look at it, the public finances for next tax year, the 2022-23 tax year, actually look reasonably reasonable, and to the extent that it doesn't look like there'll be further tax increases coming down the line, or if there are tax increases, there will be either increases in public spending or reductions elsewhere. So I suppose that is good news, but it's the inflation that has that's really bailed it out, as well as the growth. So that's like that's the unspoken context of the budget. The actual changes in terms of the budget are relatively limited. So there was a change to benefits. There was money, effectively a tax reduction by reducing the withdrawal of a benefit, but that, as a small businessman and an accountant, that doesn't really affect us because we don't really get too involved in benefits. And there were some giveaways in terms of the hospitality industry and rates, and some changes to the duty on alcohol, which he went through at great length, which and of course the Chancellor himself is a teetotal, and he took great interest in the taxation of booze. So those are the changes that did happen. The changes that have already happened, don't forget, those still stand. So in 18 months' time, this is filmed in October 2021, so in 18 months' time we have the increase in corporation tax, where it's going up from 19 to 25%. We've got the increases for the levy, it's not a tax, it's a levy, to pay for social care, which is 1.25% to employees' national insurance, employers' national insurance, and the dividend tax. All that's going forward in April 2022. So those are the tax increases that are already there, and they are going to take place. I've talked about the fiscal drag. The fiscal drag will make it increasingly difficult for small businesses. A lot of small businesses pay themselves £4,000 a month, because then you don't pay high rate tax. So it's going to be that £4,000 will not go as far. We all know it won't go as far because everything's going up in price. So it will be increasingly difficult to sneak through the system and avoid paying high rate tax. And accompanied with that, I think that one of the bigger things is the VAT. So with inflation, that's progressive inflation, and they've kept the VAT limit at £85,000. So £85,000 always used to be that a tradesman with a sort of a mate could be below the limit, and that is beginning to get challenged. So plumbers who have a lot of inputs, they're less likely to correctly not be VAT registered, and so tradesmen, as the inflation works through, the 85 limit before you have to register for VAT is becoming increasingly challenging. And it's one to really watch, because particularly for tradesmen, because there is so much work about and rates are increasing, and nobody wants to pay VAT, so I think that is something that's an unspoken thing that will affect the self-employed in particular. The other thing that's connected with the increase in inflation, of course, is the increase in the minimum wage, and that will affect a lot of small businesses. So the minimum wage is going all the way up to £9.50, and that clearly will affect what a lot of people have to pay to the less well-paid people, and perhaps the differentials on the people who supervise the minimum wage people. So that will have an effect. And then of course there is the stuff that he didn't do. So there's no changes to inheritance tax, there's no changes to stamp duty, there's no changes to capital gains tax, and there's no changes to pensions. And the really good news, I think, with that is that because the budget deficit, the amount the government borrows in the next tax year, is actually relatively limited, I really feel that it's, unless something bad happens, then those do feel very secure until the next general election, because I think that this was his last chance to increase taxes before the election, because he's not going to want to increase taxes just the year before an election. In fact, he went further than that. He completely set it up that just in 2 years' time, in a year or two's time, he wants to reduce tax, and just by chance, that is just before the next election. So who'd have thought it? So there we are. That's the budget. Very, very little in terms of tax. There's a whole ream of spending, and the reason he can spend a whole load of money without increased tax is, firstly, because a lot of it's been pre-announced, and secondly, because inflation gives a fiscal drag. So he's extracting more money because he's forcing us into the higher rates of tax, because the allowances that are set into the system are worth less in an inflationary environment. And just to be fair to him, for a little bit of balance, actually the economy is coming back much stronger than they were forecasting even 6 months ago. So thank you for watching this update on the budget in October 2021. If you would like to be kept up to date with future future videos and any detail that sneaks around in the budget that we find later on, then please subscribe to the channel. And if you've enjoyed what I say, then please like the video. Thank you very much.